Early retirement abroad, can you afford it? In this video, we cover the two biggest risks of retiring early overseas. You hear of many people who think they can retire early abroad, but they have insufficient savings and assets, and they end up destitute and living on the beach. People want to retire abroad for many reasons, including cheaper living expenses, better weather, or to meet or live with a lady. Today we will look at whether this is a good idea for you, or if you are heading for a disaster. The two biggest risks when retiring abroad early are having enough money for the rest of your life, and possible health issues and associated costs as you age. Because no one knows how long they will live, your goal is to have more money than you estimate you will ever need. The reasons for this are that firstly, you may live longer than you think, and secondly, inflation or currency fluctuations may devalue your retirement savings or income. So, how do you know if you have enough money to retire early overseas? That is a question you must answer for yourself, based on your proposed lifestyle choices. Are you going to live in a tourist area which is more expensive? Will you eat local food, or want to pay more for Western food, and will you spend a lot of time and money in bars? 1. Cash flow. You need a monthly cash flow that is larger than your monthly expenses. The reason for this is that you need to live below your means because of inflation or currency fluctuations. This cash flow could come from your pension, rental property income, retirement savings, share dividends, or passive income from a business you may own. How large should your monthly cash flow be? Enough to pay for all of your current living expenses, plus some more to increase an emergency fund which you need to set up and not touch. If you are able to pay all of your living expenses plus increase the size of your emergency fund each month, then you will have a better chance of being successful in early retirement abroad. By doing this, you will be accounting for inflation and currency fluctuations. 2. Emergency fund. Before you leave your home country, and on top of the assets creating your monthly cash flow, you will need more money for emergencies. Do not rely on your cash flow for this, because cash flow pays for typical living expenses, and is not designed to pay for large emergencies. Your emergency fund needs to be immediately available in an emergency. Your emergency fund should be completely separate from any of the assets that make up your monthly cash flow. If you start dipping into the assets that are the source of your monthly cash flow during an emergency, that will reduce the monthly cash flow you receive in future months. How large should your emergency fund be? That depends on a number of factors. The reliability of monthly cash flow? Your emergency fund must be much larger than any interruptions in your monthly cash flow source. If your monthly cash flow is based on a pension you receive from your government, this is more reliable than, say, property rental income, where the property could go vacant, or stock dividends which can go up and down due to current market conditions. Your emergency fund may have to cover a loss of rental income, decrease in share dividends, or loss of passive business income. The size of your emergency fund should be large enough to cover these interruptions to your monthly cash flow until you can adjust and replace them. If your monthly cash flow is less reliable, then your emergency fund must be higher. Potential emergencies you could face? 1. A healthcare emergency. Do you have adequate worldwide health insurance to cover treatments that may occur as you age? If you are not insured, do you have enough money to pay out-of-pocket expenses if you have a medical emergency? 2. Expenses back home. What emergencies could happen back home? If you are renting your house, what if it needs a repair due to things wearing out, or caused by storm damage? So after thinking about the reliability of your monthly cash flow, and the potential emergencies you could face, you need to set an emergency fund equal to at least a couple of years of your monthly cash flow. So think carefully before jumping on a plane. Thanks for watching. Please like the video and subscribe to help the channel grow.